Hey, what's going on? Hayden Crabtree here, and today's video is going to be about something that everybody is thinking about, something that's got a lot of people worried and it's got other people excited, and that topic is inflation. You see, a lot of people think inflation is the rise in prices, and really that's what it is, except that's not what it used to be. Inflation used to be defined as the volume of money in existence. And so inflation automatically occurred whenever the government created new money. That was inflation by definition. But really, I think around the 1950s, 1960s, the definition of inflation changed to reflect the price of goods. And so, for example, I used to could buy a gallon of milk for $1. Now a gallon of milk costs, say, $2. So we have had inflation. Inflation has occurred, 100% inflation. The price has doubled. Here in 2021, I'm shooting this video of September. Inflation is running rampant. I think the cause of that is really twofold. One, there's more money than ever. And number two, there's less goods. We're really not producing a lot as a country. Our production is down. You see it everywhere. People are hiring. People don't want to work for anything less than $20 an hour. Whenever people want to work for more money, businesses have to end up charging the customers more money. And so it's this backward cycle, right? It's kind of like, I don't know if you've seen this, but people want to tax property owners at a higher rate. And what property owners do is they pass through those property tax increases to their tenants in the form of increased rent. So, whenever we have to raise prices, pay people higher wages or property taxes, a lot of people think that that's going to hurt the people who own those businesses, own those properties, but it doesn't. It hurts everyday people, and that's really the breakdown of inflation. And where it's coming from is just passing along an increase of costs to the people who end up buying those products. And so I want to dive into the CPI report real quick. If you want to view the inflation numbers, we're going to dive into exactly what that means. So let me share my screen with you guys. And so if you want to view the inflation numbers, come to CPI report is what it's called, the Consumer Price Index. And you should get this Bureau of Labor Statistics. You can come here and we just have a really a quick graph here, okay? And so in August, this report was put on of September 14th, 2021. In August, the CPI rose 0.3% on a seasonally adjusted basis, rising 5.3% over the last 12 months. Okay, 5.3%. The Federal Reserve, who controls all of our money decisions, our interest rate decisions, say the goal is 2%, and they've been like 2% is this great thing, okay? But we're seeing right here that we're at 5.3%. We are more than double. We're almost at 150% over where we're supposed to be here. And we can dive in by category, okay? So all items, 5.3%. Food, 3.7%. Energy is up 25%, and all items less food and energy, I think they call food and energy the core, okay? And that's at 4%. So as we can see, we're way above 2% here, way above 2%. And so in my book, Skip the Flip, Secrets 1% Know About Real Estate Investing, I talk about why as landlords we want inflation, right? And I'm actually gonna dive in, I'm gonna show you guys in an actual deal that I'm analyzing the importance of understanding inflation and what it's going to do for your money, and why really everyday people should not be fans of inflation, but as a property owner, as an investor, I don't really care. So let's dive in. I'm going to show you a property that I'm investing here, and I'm going to go to My Property Stats, which is my platform I created to analyze deals, and I'm going to show you guys the power, okay? And so I'm analyzing this deal right here as a self-storage deal, and I'm looking at buying this deal for $775,000. And I'm going to do about $275,000 worth of improvements in it. This is going to be a self-storage deal. My total cost on this deal is going to be about $1.1 million, and my cash into this deal is going to be about $340,000. So I want to show you guys my pro forma here. I filled out my income, my expenses, and let me just show you here what this looks like, okay? So my potential gross rent, if all of my customers paid me the money that I think that I would get, be $180,000 in year one. Now, I'm going to lose some money because I've got to lease this place up, but we can see by year three, I pretty much got it stabilized to where my effective gross income, the money that comes into my bank account, will be $90,000, $147,000, $189,000. Now, one thing to notice here is my potential gross rent goes up, okay? And I'm using 2% here. So it goes up by 2%. From year one to year two, goes up $5,400. Again, it goes up a little over $5,000. And this number compounds. I want to show you where I input this at. Actually, I've got it at 3% here. Let's change it down to 2%. I think I was playing around with it. So I'm going to change it down to 2%, and let's come back to our pro forma. And, okay, so this is better. It goes up by $3,600, then it goes up by a little more than that. And so we can see over the long term, from year 1 to say year 10, nothing about this property's changed except for 2% inflation. The potential money that this property could produce goes from $180,000 to 10 years later goes to $215,000. And this is a commercial property, okay? And what that means is that we're being valued on a cap rate off of our NOI. Again, this is the basics of commercial real estate investing. If you haven't read a copy of this book, get it for free. I go over all of this in detail. Links in the description. PDF, audiobook, absolutely free, or you can grab a paperback, hardback off of Amazon, okay? And so our NOI is a really important number. And so as we can see, my property value is going to be tied to my NOI. And so I'm going to choose a cap rate here of, say, 7% for this property. So if I go back and I look at my pro forma, what that means is that if we divide my NOI by 7%, it's going to give me my property value. So remember, I was going to be all in at this deal about $1.1 million. And on a 7 cap at year 3, when I'm kind of done with the project and it's up and running, it'll be worth $1.6 million. So that's a $500,000 profit. But what I really want to show you guys is that I obviously have income and I have expenses here. And for my expenses, I have those increasing at 2% too. Well, here's something that's really powerful to understand, is that both my income and expenses here are increasing at 2%, the same exact rate. Really important. Income, expenses increasing at the same exact rate. But here's the thing. If they're increasing at the same exact rate, then you would expect my NOI really wouldn't move, right? But my NOI does move for one reason. 2%, a 2% increase on $180,000 is more money than a 2% increase on $60,000. In fact, it's 3x more money, right? Because $180,000 is 3 times more than $60,000. And so if both my income and my expenses are both growing at 2%, that gap is going to get wider because we're talking about 2% compounding every single year. And so we can see my NOI, again, I'm trying to do a little bit of a conversion project here, so my vacancy loss is going to be pretty high until I get it down. And so I'm taking the first 2 years. Let's ignore those first 2 years and just start looking at year 3, as we can see how much I'm going to increase by. So let's go from year 3 to year 4. I'm going to go 191,017 minus 187,272. So that's $3,745 increase versus, let's take a look at my expenses. And so my expenses increase $72,000, I'm looking right here, $419 minus $71,013. So that's only a $1,400 increase. And so if I take a look at that difference, I am gaining positive NOI just by inflation as a property owner of a couple $1,000s. I didn't have to do any work. It's just income increases and expenses increase, but because my income is larger and it's increasing, I'm just gaining money each and every year. And so this deal is valued on a cap rate basis, right? A cap rate is essentially a multiple, right? Let's say like if I owned a tech company and that tech company, for every dollar of revenue that I bring in or make, my company would be valued on 10 times that. Okay, well, the same thing is the case for commercial real estate. And so what's happening here is not only am I making an extra $2,000, $3,000 a year because of inflation in my cash flow numbers, but also my property value is going to be going up on a multiple here. So as we see from year 3 to year 4, I gained, let's do the math here, 1,674,390 minus 1,643,652, which is just value of year 4, value of year 3. I would make $30,000, this number here, $30,738. The only reason I made that money is because the increase of the income number because of inflation and the increase of the expense number spreading out, being put on multiple. I'm gonna make 30 grand that year, and all I'm gonna do is just let inflation happen. And so that's pretty powerful, right? Just that's 2%. But what if we were to come back through here and we were to plug in 5% like we've seen? Remember, if I come back here, the average is 5%, and really rent increase has been higher than that. So let's go through and let's plug in 5% increase on my income, and let's plug in a 5% increase on my expenses and see what happens. Remember, I want to be fair. My income and my expenses are both going to increase at the same rate. So let's go back and let's look at our pro forma. Now, as we're looking from year 3 to year 4, the gap that I'm making here, I had $5,000 extra dollars of cash flow, almost $6,000 extra of cash flow. And instead of making 30 grand, how much money did I make? Minus. Now I made $81,000 extra dollars, not $30,000, $81 extra $1,000. I made an extra 50 grand, and the only reason I made that extra 50 grand was because inflation went from 2% to 5%. And that's really the power. And if we were to look here over the long term, remember, this property is going to be valued at like $1.6 million. If I look over the long term in, let's say, 15 years, I've got a $3 million property. That's the power of inflation, is blowing that up. Now, I want to show you something else that's really, really important. Even at the 2% or the 5%, my debt service, my payment to the bank here on this loan that I'm borrowing, how much money is it? $760,000. My payments are $4,700 a month. If I come back to my pro forma, guess what? My debt service never changes. My NOI does, my property value goes up, my debt service does not, and for that reason, every single extra dollar I make goes straight to the cash flow and numbers I can profit. Now, I know you're sitting there saying, well, yeah, that's great, but goods in general are going to cost you more money. Absolutely. I 100% agree, but I'd rather be on this side of inflation where I don't have to do any work and let inflation produce more and help me keep up with the increased cost of living than I would be on the other side to where I have a job and my money doesn't increase at all. Here, I don't really care if inflation happens because I win. I hope inflation doesn't happen, but if inflation does happen, I win. Let's look at our property value because we also have our mortgage balance here. And of course, as we pay those monthly payments, our mortgage balance is going down and down and down. But here, whenever we come through, we can see the amount of money that we're going to make from this just starts to skyrocket because my mortgage balance goes down. That rate is locked in, but my property value is just going way, way up here. And it's pretty powerful because now we're talking about over the course of 10 years making almost $1.5 million. What was that? That'd be 5xing our money just because of the power of inflation. Now, what gets really good for real estate investors is whenever you can have a rental rate increase that outpaces the increase of your expenses. And so what I mean by that, what if rental rates, and in self-storage between 2020 and 2021, I think the national average rate increase was like 12%. And I know that expenses increased at 5% because that's what the CPI says. But what if we were to change this rate of increase from up to 12%? And let's say that happened over the course of 10 years. What would happen here? Well, the numbers start to get pretty stupid, to be honest with you. We're looking at having a property that's worth about $5 million over the course of 10 years instead of $3 million, and our cash flow being just absolutely ridiculous. We're almost making 100% cash on cash each and every single year in the later years towards the end of a decade, which is really ridiculous. Of course, our financial returns just become stupid. 60% IRR, 40-50% cash on cash just can become really ridiculous. And so the intention of all this is to show you guys with real numbers inside of this My Property Stats platform, what is inflation going to do for me if I'm not on the right side of the table, if I'm not on the right side of being a bar, if I'm not on the right side of owning property? What will inflation do for me? And the answer can be really bad or it can be really good, but that decision is yours. If you have cash, you need to get that working in a productive asset like real estate, something that is going to be making money, something that is going to be paying down debts, something that other people are going to be paying down your debts for you. All those are super important in the inflation game. And so just to kind of recap here, we talked about why it's so important to keep track with inflation, how you can protect yourself from inflation, and the power of inflation and what it has on the results of deals you're analyzing inside of your pro formas, inside of your pipeline as you're trying to go through it. And so if you want to use that program, the My Property Stats program, go to mypropertystats.com and sign up for the deal analyzer. It's super cheap. It has all the features in the world that I could ever imagine, plus so much more in there that just make it what I think is the world's best deal analyzer. And so go check it out right now, mypropertystats.com. I'll put the link below, and just go start using it. And whenever you think about these, whenever you're looking at analyzing different sorts of deals, just say, hey, what are my inflation's number? As a general rule, I like to just use 2% for income, 2% for expenses. I think we're at a high peak in our inflation. Hopefully it doesn't continue to increase at 5%, but it's always important to know what will my investments do if it does continue to increase at 5%. And so be great, grab a copy of my book if you haven't already, free. Go to mypropertystats.com. And if you haven't, like this video, subscribe to the channel so I can continue putting out more content just like this.